Crypto is crashing and some altcoins are doing worse than others. Polygon Matic is one of them. Does it make sense to buy now this dip? When everybody is in panic, we should maybe buy the fear. Let's have a look at some data most people are not considering. Let's try to find out where a potential bottom might be. Let's have a look at relative valuation charts. And let's start off with the Matic token or POL token. It's the same thing, right? They can be migrated. Let's start off with that token relative to Ethereum, because Polygon Matic is a layer 2 scaling solution on top of Ethereum. We had two times where Matic did really well. This was upon launch and this was during the altcoin season of 2021. Matic outperformed plain old Ethereum by more than 3000%. But it seems like things have changed since then. We're either going sideways now or we're going down. Now this is Matic relative to ETH and this is Matic relative to Bitcoin. Now since February of last year, we see that the underperformance relative to Bitcoin is very constant. There's barely a rally. We see that the underperformance is fairly constant. There aren't that many rallies. And so since that all-time high, Matic has underperformed Bitcoin by 92.5%. Now one might say that Bitcoin was simply just an outperformer because of the Bitcoin ETF inflows, or that altcoins in general didn't do that well. But there's another measure. We can have a look at the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10? And initially we had our adoption through the ICO phase, and now the altcoin dominance doesn't seem to rise that quickly anymore, and we are somewhat in a trading range. And the vertical line that we see over here, February of 2023, that corresponds to the vertical line over here on this Matic to Bitcoin chart. So the altcoins as a fraction of all of crypto during the same time did not necessarily perform that well. It went down by 17%, but it's no comparison to how badly Polygon did relative to Bitcoin in the same period. 92% underperformance versus 17% underperformance. Those are two different worlds. While there was an altcoin rally from June of 2023 to the end of the year, where the altcoins outperformed the rest by 63%, Polygon Matic barely moved. Now, the competition among layer 2 scaling solutions on top of Ethereum is heating up. There's new layer 2s launching regularly, and so there are more and more projects competing for similar amounts of capital. Now, how did Polygon do relative to other layer 2s? This is Matic relative to Mental. Since July of 2023 to today, Matic underperformed by 68%. Here is Matic relative to Arbitrum. Since March of 2023 to today, Matic underperformed by 29%. Here is Matic relative to Stacks. Now Stacks is a layer 2 on top of Bitcoin, not on top of Ethereum. Still an underperformance of 72%. And that's since January of 2022. What we've got over here is Matic relative to Optimism. Since June of 2022, Matic did worse compared to Optimism by 48%. So really, Matic has been one of the worst performers, and the bad performance is pretty consistent, both across different asset classes, but also over time. Now, is this then an opportunity, right? Because it might make sense to buy the fear, right? Everybody says buy when there is blood in the streets. Is this potentially a bottom? We can have a look at the market cap of layer 2s. Now we've got the POL token and the Matic token. It's the same network, so we have to add up those two market caps. That's in total 4.9 billion. The second largest layer 2 is Mental, which has 3.9. Then we've got Arbitrum 3.3. We've got Stacks. We've got Optimism. Polygon is still the largest market cap project among all of the layer 2 networks. It already did worse than all the rest, but it's still not cheap, relatively speaking. It's still relatively expensive. Now here's the thing. We've seen a very nice revival of decentralized finance in the last few months. So we had our DeFi summer in 2021, then subsequently our collapse of FTX and of Terra Luna. And since October of last year, we see again how DeFi tends to expand. Now this is the total value locked across all chains, across all protocols. We aren't yet at prior heights, but still the market overall is expanding. And we can see how several layer 2s are benefiting from this. This here is Arbitrum, and here's the total value locked of Optimism. Here we've got Mental, here we've got Base, and surprise, surprise, here we've got Matic. The DeFi summer of 2021 was great for Matic, but Matic is the only chain that doesn't really see a proper revival. Matic is a former shell of itself, unfortunately. And so here's the problem, right? There are so many different layer 2s now that when you develop a new project, there is really no reason to be exclusively available on Matic. There's all these other chains that have way more capital flowing in. And so when you build something, you will get more adoption on those other chains. Why go with a dinosaur that has zero momentum? Yes, the market cap of Polygon is still high, but the total value locked on chain actually isn't. And so that's why I believe Matic is likely going to continue to underperform the rest of the market. It might go up as all of crypto is appreciating, but when Bitcoin now doubles from here, Matic might do another, say 50%. It's probably not going to make the 3x that would be justified because we take on way more risk by buying Matic compared to just buying Bitcoin. Now here's the thing, there are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum and thus the altcoin market is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics, the supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.